Hey everyone, welcome back to the channel. In this video, we're going to look through Walmart's revenue and we're going to forecast it out for the next decade. This will be one of the biggest things we do in a DCF is trying to understand the top line revenue growth that will flow into our DCF model. So to get started here, in video 1 or 2, we walked through the 10K and we pulled out some relevant information. And we made a note on page 79 and 80, they had a breakout of the revenue. So if you go to the most recent 10K, and if you're not familiar how to get there, head on over to sec.gov, click here, more search options, ticker, type in Walmart, and then you're going to search for 10K, and the top one will be the most recent. That's what I have open right here. And scroll down to page 79 and 80. We'll see they give us a few different revenue schedules. The first one is just US versus non-US operations. So not super useful, but it is a little bit more granular than if we look at the income statement. If you remember, let me scroll up real quick. I think it was page 54 here. On the income statement, they just give us sales and then membership and other income. So not very much detail on the statement of income or the income statement. So let's scroll back down to page 7980 and let's take a look here. So this is a little bit better, it gives us a little bit of geography, but if we keep going down, they actually provide some good schedules right here, these three. Walmart, Walmart International, and Sam's Club. And they give us kind of some subcategories for each one, which is good. It gives us a little bit more of a granular picture into how the company is performing. So I've went ahead and I've copied these schedules over for 2019, 20, and 2021. So I would have gone back farther. However, they don't actually provide these schedules for 2017 and 2018. But so right here, you can see I've copied everything over. And I copy it over in billions, so 208.413, right? So this is in millions. I make it in billions just because when you look at the DCF, it's a little bit easier from that perspective if the numbers aren't so big. So there's that piece, and I'll show you what I mean. If we go to the 2018 10K, so that would have been 4 years ago, I think, assuming I opened up the right one here. And let's just jump to page 85, and then we can just scroll up a couple, and we'll see they give us, where'd it go? Somewhere in here. I guess they actually don't give it to us, and that's why I'm having a hard time finding it. So here's the revenue. They give it to us by US and non-US operations for 2018, 17, and 16. But if you scroll down, you'll see they actually don't have it at the sub-segment level in 2018. So this is something they started doing in fiscal year 2019. We can see here in the 2019 10K, just switched over to that, right? They only give it to us for 2019, not 2018 or before. So something they implemented in 2019. So we'll use that data as we have it. Now, something I want to note here as we build out these estimates, with a company like Walmart, right, like we could try to sit here and forecast each individual line, which is what we're going to try to do, and try to come up with something. But we may end up with a really weird growth rate when we kind of look at it at this sub level. Something we need to keep in mind. If we go back to the income statement, I've added just a high level sales growth for the net sales. And right, they're growing at 3%, 1.8, and then during the pandemic, 6.8. So realistically, they're probably going to continue forward, growing somewhere between 2 to 3% a year. So if we're getting something much higher than that, then maybe this isn't the best way to be looking at the revenue. But let me just show you what I've done here. So these are numbers that we actually inputted right here. And actually, I can make these blue to signify that they are hard-coded numbers that we have copied over. And one other thing, they did provide us the amount that e-commerce is, but a little hard because it's not backed out of any of these numbers. They just said in addition, right, of the 369 billion, 43 billion was from e-commerce, which makes it a little tough because we don't know where to pull it out from those numbers. So not too much we can really do with it, but I did copy it down anyways. So anyways, we paste these in, and then these numbers over here are all a formula. It's taking the prior year and then multiplying it by 1 plus the growth rate, which is what we're going to enter down here. So I've set this up so we can enter growth rates for all of this, and then everything else will calculate through and get us a total revenue number. So let's go ahead and let's start. Let's look at Walmart US. So grocery, right, it's been growing 4.5, 8.5. During the pandemic, do we think groceries went up? I would say yes. I would say, right, a lot more people were cooking at home because you couldn't go out to eat. So you're probably going to see something kind of return to here. And for this first assumption, what we're going to do is I'll probably hold most things constant to 2 years ago and just kind of see where the total revenue shakes out and see like, do we need to adjust from there? And does it make sense or does it not? Um, General and merchandising, right? A lot of people staying at home, buying desks, buying office supplies, things of that nature. This is probably going to go back close to 2020. Now, I don't want to say it's going to decline. It might because that was a high growth, but we'll hold it at zero for now. Health and wellness, right? Same thing. Let's just go back to 2 years ago. Other categories, go back to 2 years ago. Now, so like I said, for the first assumptions, I'm just going to leave everything constant kind of to 2020, and we're going to see what that blended growth rate kind of gets us and what it really looks like. So you can see we're going from 2.82 in 2020 to slowly growing to about 3.35. Now that's probably not correct. As Walmart gets bigger and bigger, its growth rate should be probably going down. And if we look at the size of revenue, right, $380 billion of revenue, to grow that to 500 billion is going to be quite the challenge, I think. So I think that maybe not the best assumptions here. So we'll come back and we'll tweak these. But I just want you to get an idea of what we're doing here as we build this out. Now, this one's interesting. Um, they didn't see kind of the big pandemic surge in the UK or in Mexico and Central America, but they did in Canada and they did in China. So very interesting. I think this is a hard one to really figure out. And I think that does make it tough, especially because we don't have any more granular level other than just kind of the country level stuff. But again, for now, let's link it all up and we'll just see what we're kind of looking at here. And we can see as Mexico and Central America continues to grow, it offsets the decline in the other, and we see a little bit of growth in this area. So interesting. And then this one's interesting. I think Sam's Club is, interesting. I would expect fuel, tobacco, and other. Tobacco and other probably continues to decline. Fuel is going to go back up. Home and apparel, hard to say. I don't shop at Sam's Club for clothing and apparel, but obviously some people do. Is it really going to continue growing 23%? Probably not, but that's okay. We'll link all this stuff back up for now. And right, for this, we're just trying to see if we hold everything back to 2020, and if they can kind of maintain these subcategory growth levels, what's really happening? Like this is crazy, right? There's no way they're going to be growing 12%. So that tells me the grocery and consumable piece and the home and apparel is just really kind of skewing the revenue. And if we come look at all this, right, that's what we'll probably see things like that. So we'll see the home and apparel going from 7 to 60. That's not realistic. Obviously, it's not going to continue growing that fast. Grocery, right, going from 42 to 62, pretty crazy as well. And then some of these other business lines just completely going to zero, probably not going to happen. I'd imagine fuel cells is going to continue going up, which will help offset tobacco and others. So this might be more of a flat business than a declining one. So, I think there's some stuff we have to go tweak here, but in total, this would get us 756 billion in revenue. And if we actually did like a total growth, we can see if it's kind of in line with with that 2 to 3% we were expecting, and seeing if this is even remotely reasonable or just a little bit crazy. Yeah, we can see, I think that's probably going the wrong direction. I wouldn't expect Walmart to increase as the future goes on. As it gets bigger and bigger, I'd expect it to actually probably taper off towards zero. So the reason I'm highlighting all this is I think that this is a common problem, is like you try to get too granular, and I think that's almost what this is for Walmart, trying to go at this subcategory level without being, super familiar with all these pieces and how they're really performing. You can get some weird growth numbers that, you think might make sense at a high level, but in reality are just kind of, it would be just as good of an estimate, I think, to look at total growth and say, historically, Walmart's been growing 3% to 2%. So let's have them grow 2.5%, slowly tapering off for the next decade. I think that would be as appropriate as a way, if not better, than trying to look at these subcategory levels. Now, What we can do though is we can look at some of these things and say, okay, grocery grew 8% last year. I think this next year, we're actually not going to grow the 4.5% because we're coming off a larger base. Let's give it 2%. And then from there, let's have it decrease 0.25% a year until it kind of levels off to about 1%. And, I think this is just kind of like an intuitive thinking here of like, we had a really high year of growth. Historically, we were growing at 4%. So we'll probably have a less growth this year because we have to just maintain this higher base now. And then from there, with the higher base, we're just going to slowly decline. I think that that's probably a safe assumption. You could probably make a lot of assumptions like that. Kind of take some of these older ones, and if you take a little bit off, what this is going to do is it's going to allow us to, let's do it like that. We can see how now we're seeing the growth rates kind of shift down a little bit, which I think is more in line with what we're hoping to see, at least what I'm hoping to see. And you can quickly see this is more an art than a science. And like this declined 5% even during the pandemic. So like, is this just gonna continue to decrease 0.5% a year? I don't know. Um, could be, could maybe, maybe not. And if we look at this revenue line now, it's going from 370 to 407. Maybe not high enough. It's been growing 10 billion a year. Now it's only going 6, 5, 6. So maybe this is too conservative. Maybe we start this at 3% or 3.5%. And we can kind of look at how things are changing, and we can see, okay, now it's growing about 10 billion a year, maybe a little less. Maybe we put this up to 4. We can see, yep, 10 billion, about 10 billion, about, you know what I mean? It's growing roughly 10 billion. Things are slowly declining. Maybe we move this up to 2.25, move this up to 8.5. Right, and we can kind of see how we're really just trying to back into some numbers that make sense. But if we're trying to get 10 billion a year in revenue growth, which is what it looked like average pre-pandemic, right? We're getting kind of there, and then it slowly gets closer to a little less than 10 and 9 in these out years. So maybe we're being a little too maybe take off 25 basis points, we take off 15, right? Something like that, and then we can see like, okay, now we're maintaining that 10 billion a year in revenue growth. But this is part of, I think, building out the DCF is understanding what you do and don't know. And I think it's hard to say for certain what's going to happen with Walmart, in the next decade, right? These could be incredibly conservative. If we think that, they're going to penetrate e-commerce incredibly well, and this 43 billion is going to become a separate standalone business worth, doing 150 billion a year in revenue, right? Then you're going to add 100 from here. Plus, you're going to have some slow growth on the rest of it. Maybe we're underestimating. So just something to think about. Now, if we look at Walmart International, right, it looks like it's actually just been flat at like 120. And if I look at these projections, I'm actually not too worried about it because we stay basically right around 120. Nothing really exciting is happening there. And I think the piece that obviously is wrong is Sam's Club. Grocery and consumables, this will continue to grow, but it looks like historically, growing 2 billion. So if we have it growing 2 billion a year, which is kind of what we do, that's actually probably pretty fair, this piece. This next piece, right, decreasing, okay, that's kind of in line. Now this is the piece, home and apparel, growing 1 billion a year. Not even 1 billion a year. I mean, it grew 1 billion here and then kind of tapered off. So the home and apparel line definitely needs to be tweaked. There's no way this is going to grow that fast. Maybe we leave it to this 5%, and what do we get then? Right, slow and steady growth. Nothing crazy. Adding a few hundred million a year to revenue. So I think that's probably fair. Health and wellness, growing a couple hundred million a year. That might be growing. Yeah, that's probably fair. So now going from 63 to 83. And if we look at our total revenue growth now, we're at about that 2%. Right, I think that's a big part of it is trying to be reasonable and making sure that what you're projecting makes sense. But I also would say another way to do this would just to say, like, instead of trying to dig into all these lines, and something you could do, you could go pull up Amazon, right? You could say, what's Amazon's e-commerce sales? We have comparable data. I don't know if we have Amazon's revenue 280 billion. Most of that is going to be from e-commerce, right? There's obviously the cloud business, but you could back out that. So they're clearly doing 200 billion probably of e-commerce a year. A little bit different model, but very similar, right? So, there are pieces like that. We can look at Costco doing 150 billion. So in our model, we're saying Sam's Club is going to get up to 83 billion. It's going to be half the size of Costco. But obviously Costco is going to continue growing, and right now they're a third the size. So, maybe that's fair actually, maybe this is a little underweighted, maybe it's a little overweighted, hard to say specifically, but seems in line with that aspect. Um, so these are just kind of things you can look at. I didn't pull in a Chinese company in here, but you could pull in like Alibaba, JD, whatever the big Chinese kind of retail and commerce companies are, and see what their total revenue is and see how much China or Walmart's going to be for Walmart China in comparison. So, I think there's a lot of interesting things you can do. I think these are relatively safe revenue assumptions. Obviously, we're going to do a little bit of a um, sensitivity on this, just kind of looking at, different things. We could do different revenue growths and see how it affects everything. But, we'll start with these assumptions when we build out the model in the next video, and we'll just go from there. And we'll see how it all kind of comes out. I think if you're performing due diligence and you're looking to invest in a company, right, it would definitely be good to go read through Costco's 10K, understand their growth drivers for Costco, look at how many stores they have, and then come back and look at Walmart's and say how many Sam's Club locations are there, what's their growth strategy, and see, do we think we can get to the size of Costco in a decade, right? Those are all things you'd want to do. Just kind of really further looking into things. And that might even be a better way to look at this data. Instead of looking at the total Walmart level or at this kind of subcategory, you could look at Sam's Club, International, and US. Try to focus on those three lines and look at that aspect, right? So another way to look at it, and if we look at Target, right, they're doing 78 billion in revenue, so they're not even close. Walmart is already just way, way larger than Target even. So can they maintain that lead and keep growing? Have they already penetrated all their markets? Are they saturated? Is their growth really just going to kind of trickle to a stop? All things to think about, but that'll wrap it up for this video, just kind of showing you how to pull the data in and a few ways to think about it as you make your projections for the revenue. So next video, we'll pull this into the DCF and we'll finish off the assumptions and come to a conclusion on Walmart. Thanks.